But today's lesson, the halt strategy. And it's kind of a two-part because, yeah, you don't want to be this, right? You don't want to be this person. You don't want to be sitting here on the downside, right? This was you, right? You were caught up in this, like, yeah, man, let's go. And then you get a gap down like this, and you're like, no. This is the first moment, and then this is you crying. Your wife walks in, and you're like, why are you crying like a baby? Like, well, I just lost all of our savings. And then she hits you across the head and divorce anyway. But you get my point. You don't want that to happen to you. So here is what I'm doing with the halt strategy. It's kind of a two-parter. Combining mine and Dex. When we get a full, and here's mine. When we get a full gap up, this is mine, more of mine. When we get a full gap up and a spike, or maybe just kind of a small gap up with a pullback to support. It's going to be one of the two right there. And FOMO sizing when entering. Always FOMO sizing. What I mean by FOMO sizing, FOMO, fear of missing out. So Iggy taught me this forever. Is what I learned from a great trader in chat, Iggy. When you don't want to miss out on these plays and yet they're going bananas, right? You want to jump in, whether it's a bounce or it's a true breakout. You're just buying in with it because it's halting up, so you're just buying in with the momentum. FOMO sizing is going at least half the share size you'd normally go in. So if you're normally going like 1,000 shares, go in just 500. At the maximum, I'm saying that. You can go I'd say even go 100. Just go on 100 just to get in and be a part of that trade. Understand you're not going to get the full profit you normally would get, but go in FOMO sizing when entering on these halt strategy plays because usually what you're chasing, right? It's been halted up, maybe multiple times. Even if it is halt down, which we'll get into the halt down, strategy as well. Obviously, when it kind of comes back to you, you have to be careful. Always improvising and adapting to the changes, right? You always have to improvise. You always have to adapt. Always. These plays are going to be going up and down, down, then up, down. You get my point. You have to adapt and change your own buys. Sometimes like I remember this multiple times where I'm just seeing a stock continue to run and not coming to these bounce plays I wanted. Well, there goes that entry. Well, okay, there goes that. And it's just not happening. So you just be a stock sniper. And what am I doing? I'm just improvising and adapting to the changing stock. Sticking to your plan. Gone over this all in its own entirety as its own lesson, as you can find over on Instagram and, of course, YouTube soon. But as soon as you stick to your plan and you continue to stick to your plan and you continue to stick to your plan, so your entries and your exits, whether it's your stop loss and it's falling down on you, you have to get out. You're not bag holding. You're not holding this over, as this continues to fall on you. You're scaling out into your entries, your plan that you've developed. Like, hey, okay, I'm going to enter in here and I'm going to scale out in these areas on the way up if I get to them. Sticking to your plan, paying yourself on the way up. Sticking to your plan, sticking to that stop loss so you're not holding $2 down from an entry going, man, I'm down $2 here, 1,000 shares, I'm down $2,000. Whoa, what am I doing? Don't do that. Put limit orders in as I do ahead of time. If you can do that, give yourself plenty of time and you're adapting, right? Improvising. You have these limit orders and you have to keep adjusting them, but you're putting those in if you can. If which you need to get comfortable with those. Those are awesome. They get filled. The only thing I don't like about them, sometimes they may kind of skip out a little bit, as in you may not get filled your full share size, so just be careful of that. Or, and I've gotten used to that as well and very good at this, over time, market ordering in on those dips. So when you see it pulling back hard, or on those just on the way up, like Dex says, I can't miss out on this trade. I've got to jump in. You just fill it and you jump in, market ordering in. Now you're not going to get the best. Now that's going to opposite of the limit order. You're going to get filled fully into your full, say 1,000 shares, but you may not get the entry you wanted. You're just essentially needing to be a part of that move. So let's get into some of these trades themselves. And this is going back all the way to, I have these slides essentially, or whatever you want to call it, examples from all the way last year. This isn't just something new. This is something we've been doing for years now. CARV, remember CARV? I love this bounce. Beautiful. So what am I looking for? Usually on my halt strategy. I'm looking for this right here. This to continue to push. We gap up out of a halt. So that you can tell right here, this is where it halted up. 1122. Closed off. There's no upper shadow, whatever. Boom. Closed off for the halt up. Your dip buy is going to be waiting for this. If we get a gap and go, and sometimes it may move without you. Like I wanted this to dip real quick to 1122 and go. It opened and moved. It went without me. I waited like a stock sniper. Going, if this comes back to the VWAP for sure, and even I'd love for it to come back right to this area for a beautiful bounce. And this is where I didn't have before I was really using limit orders a lot more so than I do now, and just market ordered in here. And my fill was really closer back toward the VWAP because, of course, I market ordered in. But as soon as I see this, because this halted down, this was now halted down. And I'm sure I alerted in chat, I am looking for this to come back down and open around, I'm sure, around the VWAP and pull back to hopefully the old halt up area, which will be my halt strategy for a quick dip and a push back up. Now I'm thinking this goes back through the VWAP, maybe through 12, This went all the way back up through 13. This was a $2 bounce right off of this old halt up area. And another prime example, and I didn't overcrowd it with examples, but this was a halt up out of the gate. Look where this pulled back to, right here. Oh, that wasn't a halt up. Okay, I thought it was another. I have another example that's like that coming up where there's a double halt up, but it does the same thing, and you'll see it. I'm going to get to it. But to finish off CARV, again, after we get the nice spike, wait for it like a stock sniper to your entry back at the old halt up area at 1122, 1120, whatever it was. Look how it bounced twice off of that team. Look how it bounced again off of the old halt up area. I can't preach it enough. I love it. Now, of course, this is when stocks are hot and rocking and rolling. Say like, December was relatively hot, and then really into January was just like, wow, what's going on here? It's crazy hot, halting up and down. These are when, now, yes, more so when you're still, my point being, when it's a little slower, you may not get 2 bounces off the halt up area. It's a little bit slower time period. You're going to get your 1. You're definitely most likely, almost a lot of the time, you're going to get your first bounce, and it may be quick and small, but you're most likely going to get one. But when it's hot like this, as you can, obviously last year in June, it was still, it was spicy last June. It was the spiciest June I have ever seen in my 4 or 5 years of watching stock. This will be the 5th full year. But I do not remember a June that and like I said, just carried over from coronavirus plays which were starting to really hit hard right about now last year. Regardless, though, when it's hot, look how you get two beautiful bounces off of the VWAP. And that perfect bounce ball effect. Our bounce basketball effect, right? Bounce ball, whatever. But the basketball effect. 1 bounce, nice big. 2nd bounce, getting smaller. And I bet there was maybe 1 small 3rd one, and then it finally went through and cracked what? The beautiful support at 1120. So beautiful basketball effect there too, but as of course, off the old halt up area. Now here's my double whammy IMTE, where you get 2 beautiful pullbacks almost right to the penny of where it halted up at. Halted up many times on the way up, once at 848, once at 1012. Look for the gap up, right? And these got really nice gap ups. Man, if you were in IMTE, you're like, yay, what a gap up. But then you want that quick lower shadow, quick pullback to what? The halt up area. And again, look at that. It's funny, I even wrote that in. Again, after we get the nice spike, wait for it like a stock sniper for your entry back at old halt area. So we gap up here. And now this is more of those ones where if you had a limit order set, you may have missed it because it hit 850. Remember, it halted up at 848. This hit 2 cents away twice. Again, opened up, or I should say closed at 1012 on the way up, opened up and came right back down to 1014. Again, 2 cents away. It's one of those ones where, again, you already have the FOMO sizing limit order set in, right? So you can say at 1012. Or if you just like, hey, I know 2 cents, 5 cents above, that's good enough. That's fine with me. I'll take that few, I don't have to be right on the dot. You would have gotten filled here. Secondly, if you didn't get filled because it just went right through your order, or like I said, you put it a little too low. That's where, again, you have your FOMO sizing ready for your market order, and you just pull the trigger going, oh, I didn't get filled on, and you just jump in. Boom, you just jump in. You would have been beautiful here. Now, like I said, the fill wouldn't be as good. You're going to be higher up. Either time, though, money, even if you market ordered in. But again, halt strategy coming right back down to where it halted up. Again, it halts up. Look for a good, nice gap up. And sometimes the gap ups don't even have to be this big. Sometimes they can just be 10, 20 cents. But wait for that lower shadow to come right back to the halt up area. And of course, does it one more time again. But boy, you have to be super quick. Super quick team. But again, 2 cents away on every halt up. It halted up at 1168. This came down to 1170 on this dip. Honestly, kind of nuts, right? How 2 cents away. 2 cents away on this one. 2 cents away on that one. And again, sticking with what? The trend. It just kind of nuts how it stays that way, but that's just what happens. Wins. So let's get to these crazy plays. And now remember WINS. These crazy plays that we do see move from $5, $10, $20 area. Usually, sometimes it's in the 5 to 10, but sometimes like this year, GameStop, we've seen wins do it in the $20 area, 20, 30, they start ripping and go up to say 70, 60, 80, 100, whatever. You're going to see the same strategy being able to be applied. Here are your halt up areas on wins. 34.10, 52.07, 64.88. Now the first one not nearly as close. It's not 15 cents, but still pretty on a stock that's moving $50 on the day. That's about close, sometimes about as close as you're going to get. Now look at the next one on the dot. It hit 52.07 right here. You can't really see it because the blue line's in the way, but it was a quick little lower shadow like you kind of see right here. See this little lower shadow? It was one of those right there where it opened up right beside it, essentially pulled back to the lower shadow, or pulled back, I should say, to the halt area, and then shot up into another halt. Then again, the last one here, 64.88 is where we halted up again. Opened up, as you can see, a good probably $1.50 above. You can tell it's over 66, probably 65. It's over 65 is the main thing, but probably close to 66 where this opens up. Pulls back to 64.91. We're talking 3 cents away from where it halted up at. Beautiful. Even on these crazy, crazy movers that have sometimes a spread of 50 cents, if not more, you're going to see the same strategy being able to be applied. APDN. Another great one, which you have to sometimes wait. Like the first example I showed you, like a sock sniper. Look at this. This is all the way back on March of April. I can't talk March. It was March of last year. Crazy play. Spikes out of nowhere, like we see a lot of, right? No volume before. There's no volume here. It's a sketchy play. It's a pump and dump. Purely, truly, no how, no way. It can't be. But again, if you want to get that FOMO trading, you don't want to miss out. Wait like a stock sniper. This hit 1 cent away. Halted up at 441. Didn't get that quick pullback like I like sometimes right out of the halt up. You know, boom, it halts up. And then you get that first candle to pull back. Those are the ones I like the most. But sometimes you just wait and just wait for it. And it does. And hits 1 penny away. And of course, yes, only gives you about maybe a, 35-cent bounce. But I say only. I mean, that's a good bounce. So a nice bounce still from the old halt up. Now, Dexter strategy. We've seen from these just recently. I played Dexter. I played Dex strategy. We get this halt, and then I'm going to give you two. It's kind of a twofer right here. So how to play out of the halt down too. So Dex strategy and how to play, and it was almost the same type thing. It's kind of the Dex strategy. You're just waiting for a pullback to support. So we halt up right here around the 875, literally the 875 roll, right team? Right around that area, it halts up. Now it does what I like. Like I said, doesn't really gap up. Maybe gaps up beside it. This is the Dex strategy. It's what you want to see. Maybe a small gap up, but usually a gap up beside is what you see most times for a Dex strategy play for a bounce. Now it doesn't unfortunately, pull back to your bounce area right out of the gate because you get a halt down so fast. It's one of those plays that can halt really quickly. So just like a stock sniper, you wait. You wait for your entry. Now I can't remember, and I did. And I'll show you where I was alerting it. But the same thing, I wanted to pull back here. I like this little kind of sandwich area. 735 was the best area, but I figured 750 was about as good as I was going to get there. So I was waiting for a pullback to the 750 area, 735 for an entry. And of course, just waiting, and I set a limit order in, just waiting for it to get filled. With a move, back up, and that's fine with me. Get filled at 750, back up to 875, which we get, as you can see, we get this immediately. We halt down right here. We open up pretty much right beside it, but we get this immediately nasty pullback, and it actually came all the way back down to 7, right? Came all the way down to 7 on the dot, I think. So my entry easily got filled on the limit order. And then here is the alert at 48 after. As you can see, this is halted up, or down, I should say, at 42, 43 after. Before I'm going long out of this halt, if it opens at 7.5, right here at 7.5, it opens at 7, which it opens right above it, but shot straight down. And that's what I wanted. I was like, I know if I get in at 7.5, that's good enough for me. It may not hit far, that far down, even though it did. I wanted that 7.5 fill, and I got it. It's exactly what I wanted. And again, just so you can see it a little clearly without maybe words and a bunch of stuff in the way. We have the halt areas where we halted up or halted down. So halt down, we have a halt up, and here's your halt up again. But then your support lines, and that's where people, a lot of traders are having. They'll have a ton of these lines, these blue lines in as support. I colored them on. Like I said, you can color them on Thinkorswim after you put them in. I'll show you how, like I said in the setup tutorial video. But just that's essentially where I'm reading these plays at. Where I went, okay, I don't care. It's halted down. I know this move, this nasty. It's beautiful, but it's just nasty. Like I'm gonna get you type U shape. Beautiful. It has the volume, has the momentum. As you can see, ended up running to 14. Wanted to just get in quick, and this was a quick trade. I was in and out of this trade. I think I don't know if I was still in it. I can't remember into this halt because I knew it was going to do the same thing. I think I was out before this halt up because I know I got back in on this trade. But that's my point. I'm in and out of these trades, knowing that they can tumble it over at any time. But I'm taking those quick rips. I'm in quick dip to 7.5. I'm in, and I was in right here, even though it dipped below. That was fine with me. We shot straight back up to that 875 roll, right? 880 essentially. Halted up again. And then now when we do the same thing, we open up beside, we know what team. If we open up usually like this as we do, or in this situation we did, you're probably going to have a pullback. So if we open up beside it like this and you see a quick little spike, that's what Deck is just, like I said, chomping at the bit to get his bounce play in. And boom, then you're in on this quick pullback to what? this little support area, where we're finding nice areas where we're going to pull back to, get in on these, the next push up, the next leg up essentially. Again, finally halts up again here. We finally get a halt up. Opens up beside it. You look the immediate dip back down, what deck loves, but then this is the thing we love so much, then the push back through. We don't like to get in. We love the quick dips, but then we want the push back up to do the same. We want this to dip down fast and then push back up fast. Those are the best. Obviously makes sense, right? Because you're immediately profiting. Boom, you're immediately down on that quick dip, and then it's shooting up $1 from your entry. Who wouldn't love that? But again, what we're looking for in the deck halt strategy here, we're pushing up into a halt. We open up right beside it, and we pull back to support. Buying in support, as this now is obviously and usually does when these momentum plays, these mob plays, does bounce super quickly. Be a stock sniper. Again, here's another one. There's another recent example. This was still some September. I was trying to find as many as I could through different alerts. But PEC, here's PECK. Again, waiting for plays on the way down. This play was a little bit more sketchy on the halt up area, but here we go. We're halting up. Still waiting, which we did here, and I didn't want to put an arrow in. But here's your first, and I forgot to put the pricing in. I think it was like 3 cents away. Halts up right here around the 970 area, I think it was, and this pulled back right to like 973. Beautiful. So if you would have gotten in there, I know it's super quick, and they are a lot of the time, whammy up into a new halt. And then here's your halt down. You're waiting for what? Bounces off the old halt area. So here's your first one. Would have had to been a quick play, but you easily would have gotten a good, probably even 50-cent bounce if you would have got filled here at 970. Probably really hit about 1050. But I'm saying, as far as your fills would have been, because you're probably market ordering in, market ordering out, you would have got a good, 30, maybe 50-cent play to that. But the true one I would have waited for, because it's a double whammy in the VWAPs there, is this old halt up area right here that we didn't get a lower shadow and pullback to yet. We still haven't bounced off this halt yet, is my point. It still is waiting for its bounce, just sitting here patiently saying, come on, bounce off me, come on. You want to. And then we do. Beautifully. And the VWAPs there on top of the fact, so you get an 8.10 fill essentially, $8 fill, and we push back up to 10 eventually. I mean, you almost, the next 3 candles really essentially got that push back to $10. And then when I didn't even kind of just really noticing right here, the deck halt strategy. We open up, as you can see, we halted right here. You can tell that's a halt up right here. Look where we open up. We open up with a quick pullback. We open right here, we pull back. That would have been probably deck trying to get filled here at the 650 area, right there. A small sandwich. I know the sandwich isn't fully connected because of the gap up right here, but you can tell that's where deck probably would have tried to get in real quick. 500, 1,000 shares, pull the trigger, waiting for open up, and it opened, as you can see, actually a little bit below, came down to a quick little dip area, and then pushed back up into another halt up, and then kept going. So, again, the halt strategy, the 2 different ones. If you're looking for a deck halt strategy, you're looking for it to open up essentially beside the stock or maybe below it, maybe a little above it, but essentially beside the stock, and it pulls back to support. You get on that quick bounce as it shoots back up through new high, creates a new high a day. And of course, my halt strategy that I came up with would be the, on the opposite end. We get a gap up and a spike, or a spike, a no gap up, just a spike up. But this we want this pullback, this lower shadow after we've gapped up or spiked out of the halt to the old halt area that we just halted up from, which, as you can see, many times we hit 2, 3, 4 cents away. Right here, hit 1 cent away right here on this example. The crazy mover. I mean, one time hit on the dot, 52.07, came back and pulled to 52.07. So, again, use these halt strategies. It's deck, it's mine combined, but essentially the halt strategies, whether we get a gap up or we get, the gap up and go with a little bit of pullback straight to that halt up area where we just halted up from, or the deck halt strategy where we kind of, open up right beside the stock from the halt. It pulls back to support, and then we shoot right through that old resistance and high a day with a good bounce, essentially. So there's the halt strategy combination lesson.